Good day, guys. Welcome to Forex Walker. Welcome to episode 75. Now, in this episode, we'll be talking about the trades that we're looking forward to, and we will also talk about the US dollar and the rigging of the US dollar economic reports that we spoke about on episode 74. Where most of the important economic reports were halted from being published, were prevented from being published, and the Jerome Powell did tell us that some of those important economic reports were not published, and we do know that uh, if they do publish those economic reports, what will happen to the US dollar is that it will collapse. So these are things, these are the reasons why I say the US economic reports are rigged. They're not telling us the truth about exactly what is happening in the US economy. Now, these are one of the economic reports that will make the US dollar collapse, and this is market sentiment. So, what it says is China retrieves its treasuries from the US market. That means China retrieves its assets that were invested in case of uh, any difficulties in the economy. When an economy collapses, what they do is that before it collapses, they invest treasuries in another country, they invest their assets so that when the economy collapses, they can borrow those assets and use them uh, to revive the economy that is collapsing. So the China decided to retrieve those assets because of the fear that was created when the US, the United, when Russia went to war with Ukraine. The Brussels, as well as the United States, they decided they had an agreement that they needed to use to freeze Russian assets, and they used those Russian assets or treasuries to fund or finance the weapons that are being used in Ukraine. So, in other words, a Russian bank account is used to fund Russia's enemy to buy more weapons for. Uh, so, just imagine your bank account buying weapons to kill you. So, that's something that they're using against Russia. They're using uh, uh, Russian assets to buy weapons for Ukraine to defend itself against Russia. So China became afraid, and they decided to liquidate or buy out their treasuries to retrieve their treasuries from the United States. They're doing it bit by bit, but at the end, China will not have a single asset in the United States. The second reason for the United States currency to collapse, here it says South American countries relinquish the US dollar for trade. So this is market sentiment. What it tells you is that uh, they chose the Chinese yuan for trade. And okay, most of those countries are BRICS, are the countries that just joined the BRICS. So they decided to relinquish the US dollar for trade, and they decided to they opted to use the Chinese yuan for trade. And what happens is that the US dollar will have nothing that is lifting it up there. So in the past, every single trade, okay, in the past, trade was used, what was made with two currencies, the British currency and the US currency. but most of the time, oil and gold. No, I think gold was for was used in Britain, but the United States was also used for trading gold, and but for sure it was used for oil. So most of the trades were done with the British currency and the US dollar. So right now, because of the relinquishing of this US dollar usage for trade, that will also collapse the currency. The third reason, here it says the U.S. military base, a military U.S. base, U.S. military base. I apologize for that. Was kicked out of Botswana, and at the moment, actually, most African countries they opt to use China or Russia as their military friend, and they also trade with them as friends. So what happened is that the United States lost its foothold in the African continent, and what do and France followed. France also lost its. France was kicked out of the Sahel regions, which is three countries: Burkina Faso, Niger, and Mali. So they were kicked out of those countries. So at the moment, that's the reason why we had the load shedding and the huge protesting in France. So that's okay. Load shedding is a what do they call it? Load shedding. Let me look for it. Load shedding is a power outage. So in France, they started having power outages because they were no longer able to get those cheap uh, minerals from Africa. So most of the African countries, the Sahel regions and Botswana, they decided to refine their own. Why am I forgetting these words? They decided to refine their own minerals and produce them as a finished product so that they can decide the price of their own minerals. And those things are making life difficult for both the West and the United States. So these are the three reasons why the US dollar should collapse. There are many other reasons. At the moment, the United States wants to bring the United Nations to Kenya, and we all know that the military that will be there in the United Nations is actually the U.S. military. And there's another American president called Paul Kagame. If it happens that Paul Kagame is replaced, that will create another collapse in the US dollar because the US is actually buying coltan from Rwanda, but more of that coltan, about 80% of the coltan that is being produced, that is being mined by Rwanda, actually comes from the M23 rebels in the DRC. So that's just something that is being done by the president of Rwanda, Paul Kagame. And if it happens that he's replaced, the U.S. economy will collapse because the other president, the new president, may not want to do the atrocities that are done by Paul Kagame in the DRC. So those are some of the reasons why the US dollar may collapse in the future. Now, this is the JPY. What will happen is this trade will proceed for the longest time. The reason why it looks like that is because it is an economic divergence, and here both currencies were bullish, and that's the reason why you see a sideways move instead of this move that you see here. So this move will actually move higher, but somewhere somehow it will have to move sideways before it moves higher, because the economic divergence will end soon. So let's look into other currency pairs. The Euro AUD is actually a trade that I've been looking at since April the 9th. So we went to the 50% FIP and we went back to the 23.6. At the moment, the trading systems that I use is that we have the first touch, second touch, and here we manipulate it twice, and we're expecting price to actually move back to the 23.6, the green line, the 23.6 here. So what we're expecting is that we have our first touch, second touch, the third touch has to manipulate, and where it manipulates is actually within these two previous shoulders here within this level. So that's what we're expecting. It may not go all the way up there. It does not matter where it goes. What is important is that it will tap into the 23.6. And because of that, what we will do is that we will set up our sell stops all the way from down here. As the market moves higher, we can actually move our sell stops, and when the market reverses from wherever it comes from, it will tap us in and it will take off. But the most important thing that you need to know here is that the Australian dollar just introduced itself into an interest rate cutting cycle, and the euro is actually about to exit the recession. So this trade will continue to move in within this channel, which is an uptrend, and not it will not collapse all the way down there. So that is what we're expecting at the moment. That buying the Euro AUD is better when you take it long term, and short term for selling. You can take your sales short term. And the Euro AUD is actually a high yield trade that we're looking into. The second high yield trade is actually the Euro ZAR, the Euro South African Rand. The reason why we have this pullback here, you can see that we're having a pullback upwards. The reason why we have this pullback is because the South African Rand just introduced an interest rate cut. And what happens with an interest rate cut is that the currency will be short term bearish, which is bullish in this trade. It will be short term weak, and somewhere, somehow, it will turn bullish again. So that is something that we're looking into. So for those who want to take the trade, they can actually take it in this form. They can wait for the previous shoulder here to be tapped into and the market to reverse into the 23.6 and collapse all the way down there. That's how you can tackle the trade, but we do not expect any form of huge pullbacks all the way to the 23.6 at the moment. This is also another high yield trade that we're looking at. This is the Euro Hungarian front and Euro Hungarian front HUF. So this trade was traded quite a long time ago, and this is where we went to the 23.6. That was in January 2025, the 10th, and the market collapsed. It is a high yield currency because it will keep moving lower. So you can actually hold this trade the same way that we held the South African Rand with the Euro. You can actually pull up your 23 point, your feed. This is how you can catch it with the feed. You can go back to the 23.6, the previous shoulder here, and reverse with it and collapse. And actually, the South African Rand will actually go bullish because of the G20 and the funds that are being brought into it. Thank you guys. I'll see you on the next episode. Goodbye.